Morning, ladies and gentlemen. Wonderful to be here today, and wonderful to have such a solid turnout. Thank you, Wholesale Investor, for having us. And very pleased to see so many crypto enthusiasts. It's excellent. I'm Tim Johnston. I'm from Apollo Capital. I'm here today to talk about the Apollo Capital Fund, which is an actively and professionally managed portfolio of crypto assets. Quick disclaimer, might be a bit hard to read, but key point here is this is not financial advice, and if you are considering investing in the fund, please read the information memorandum. There are three key takeaways that I'd like to communicate today. They are the opportunity. Crypto is an enormous opportunity, and we see this as an opportunity to invest in the foundation of a new asset class. The second takeaway is the fund. The fund solves many of the pain points associated with directly investing in crypto. The third takeaway is the team. We think we're extremely well qualified to manage a portfolio of crypto assets, and we think a team approach is preferred when compared to investing individually. Right, so the first point, first takeaway. Now, at this point, I was actually going to do a poll and get a feeling of who is a crypto convert, who's a crypto critic, and who's here to simply learn more about crypto. But Steve told me he did that at the start of the day, and apparently 70 to 80% of the audience have invested in crypto, which is fantastic. So I won't dwell on the opportunity too much. I'm going to assume that we're mostly converts. Having said that, if you are here to learn more, or you are a critic, please come up and talk to us. Visit the website. There's lots more information where this comes from. I'll still talk about it a little bit. Just to give you an idea of how we think about the crypto opportunity. As I said, we see crypto as a new asset class. So right now is the opportunity to invest in a new asset class, and that doesn't happen very often. I wasn't alive when equities as an asset class began, or debt. It's very, very rare. We think the returns of this asset class will be realised, and the panel touched on it, which I'm glad they did, as crypto becomes more mainstream. As crypto becomes more mainstream, demand will increase, and hopefully the value of the crypto assets will increase as well. So there's a couple of ways that we think that this demand might increase for crypto assets. We're not sure exactly, or what might be like Fred was talking about, what the tipping point might be for crypto to become mainstream, but we think there's a huge potential, and it might happen in a number of ways. It might happen in only one way, but we're pretty confident that the technology is there, and the potential returns are there as well. So I'll talk about these quickly. The unbanked, the World Bank estimates that there are still, in 2018, 2 billion people in the world without a bank account. Crypto solves that as a store of value, like Fred talked about. Cross-border payments, 2018, it's still a nightmare. I had a personal experience with this recently. It's very difficult. Bitcoin, you can send it peer-to-peer almost instantly. Micropayments, I've skipped one. Democratizing capital, the panel talked about that as well. ICOs, an opportunity to raise capital. Micropayments, 2018, it's still an issue with major financial institutions and the way that their financial infrastructure. Crypto, again, it solves this problem. A couple of other ways: data ownership, keeping data private and actually owning one's data. General purpose computing platforms, obviously Ethereum. There are many more. Store of value, I'll talk about on the next chart. But these are just the ways that we've thought of, or other people that have thought that crypto might become mainstream. We're confident that innovation will continue to flourish. Some of the world's best developers are working on ICOs, working in this space. So we're confident that innovation will flourish. Key point here is just as Bitcoin has disrupted financial middlemen by allowing people to trade value directly without the need for an intermediary, we think crypto will continue to disrupt and cut out middlemen. I talked about it. I won't harp on this because the panel did talk about Bitcoin as a store of value. Bitcoin has been likened to or called a digital gold. The key point of this chart is Bitcoin still has a long way to go. The chart shows gold as 5%, which is the middle bar, and 10% of gold as the final bar, and this is roughly the current Bitcoin price today. So if Bitcoin were to become 5% or 10% of gold, it still has a very long way to go. And by that, I mean the total market cap or the total value of all the gold in the world. I won't harp on this as well because we are crypto converts, but the point of this slide is the top venture capitalists in the world are backing crypto both financially and publicly. It's their job to identify the most promising technology in the world, and these gentlemen in particular are very, very good at what they do. Between them, the early investors in Facebook, Twitter, Tesla, Coinbase, which is a crypto exchange, Airbnb. But there's a problem. Investing in crypto is hard. It's not easy. It depends on how tech savvy you are, but particularly for those that aren't tech savvy, it can be very difficult. Now, when I say that, it can be even more difficult to construct a proper portfolio out of crypto assets. It's becoming more and more straightforward to buy some Bitcoin or to buy some Ethereum, but as I said, constructing a portfolio can be very difficult. It's hard to pick which crypto assets to choose, which ones to invest in. It's hard to store the assets safely. It's hard to trade the assets on exchanges. It's hard to keep track of reporting. It's hard to keep track of compliance and tax. These are all teething problems that come with a new asset class. So this leads me to the second takeaway of today's presentation, the fund. So the Apollo Capital Fund, we feel that we solve many of these problems. We take care of tax, we take care of the reporting, and by that, when I say we take care of tax, it doesn't mean that we completely take care of it. We still obviously need to pay the tax, but we make it easier for people. We take care of reporting, we take care of security, which is enormous, trading, and the research and analysis. So I want to call out two of these in particular, the security and research. So too many, just starting with security, too many investors today, crypto investors, are relying on exchanges. It's just regular, almost commonplace news that exchanges get hacked. And it's well known that it's not best practice to leave your crypto assets on exchanges. You are trusting, if half the point of crypto is to have a trustless system, you are trusting a centralized point. So with the fund, we take care of that as much as we can. We obviously need to do some trading on exchanges, but we try to follow best practices. Well, we do follow best practice as much as possible, and by that I mean we store as much in cold storage as possible. The other point is research and analysis. We apply a new structure to valuing and analysing these assets. We have 3 full-time professionals constantly looking at crypto opportunities. We have an investment committee which meets monthly to discuss opportunities. We have advisors that help with deal flow and their opinions on certain investments as well. All of this combined together means that we think we can analyse crypto opportunities in greater detail and with greater rigour than can an individual. There's 2 other points I'd like to make as well. The first is self-managed super funds. Now, I've spoken with auditors, and there can be audit issues with directly investing in crypto through one's self-managed super fund. Part of the problem can be proof of ownership, proving that you control the assets and that the assets are not being used for personal use. Investing in a fund, don't have those issues. It's just a unit trust. So units in a unit trust, it's very straightforward. The other point I'd like to make is comparing the analogy, comparing investing in equities. Many in the room today, equity investors, they might invest in a fund, but they also might invest directly in shares that they like. There's no reason why you can't do the same with crypto. Have a portion of your assets in a fund and invest in select ICOs. Maybe some are presenting today. I'm going to talk about the investment strategy of the fund. First of all, the fund is live and kicking. We started on the 1st of Feb, generating returns. The key philosophy of the fund is a long-term belief in crypto. Personally, I'm not fussed what happens month to month in crypto. It's a we think the biggest gains are to be had over a long period of time. 60 to 70% of the fund's asset are in long-term positions, up to 30% in ICOs, although we are highly selective and we do remain cautious about ICOs. And the last two can be grouped as opportunistic trading, taking advantage of opportunities that present. The third key takeaway is, excuse me, the team. And this is where we think we have an edge. There are a few funds popping up, and we think our edge is we combine traditional financial services experience with a deep passion for crypto. There are many people that might have experience in one or the other, but there aren't that have much experience in both. Henrik Andersen is our Chief Investment Officer. He's here today. He's presenting. I'll talk about that later. Super knowledgeable, very smart, very passionate about crypto. Himself, he combines that experience which I talk about. He's been investing in crypto since 2013, and he has 17 years financial services experience, including almost a decade on Wall Street. Very, very impressive CV. Got a minute or so? Finish. Okay, that's fine. We can finish. Let me go. This is the broader team. Fund terms, I'll quickly talk about this. We're only open to wholesale investors. Minimum investment is $50,000. We're open for monthly applications. It's a monthly open-ended fund. And the last point is Henrik is presenting at 3:55 today. The presentation is on valuing ICOs and crypto opportunities. So I'd be very surprised if you didn't learn something from that. It would be very interesting indeed. Thank you for your time.